Hey guys, welcome back. In today's video, I'll be breaking down my euro-dollar trade, which I took during the Asian session. Now, this trade was a great trade because there were a couple of confluences and factors in play, in particularly power of 3. So if you guys are keen to find out how to use power of 3 effectively, stay till the end of the video. As usual, I'll be breaking down my market analysis from the daily time frame all the way till my trade execution on the 1 minute time frame. So let's get started. So on the daily time frame, we can see that price has been bullish in the last couple of days. We've got huge bullish candles here. In particularly on the 10th, we can see this particular bullish candle has completely engulfed these candles that have appeared in the past couple of days, signifying that price is looking to go up. And if we put a couple of annotations on the chart, you've got our daily buy side liquidity here. We've got our previous day high and our previous day low. Now, the reason why I mark these two levels here, previous day high and previous day low, it's because if you're forming bias and also if you want to know where liquidity pools potentially sitting at, these two levels could give a clue. But right now we know that price is making bullish moves, so I'll be maintaining my daily bias as bullish. Down to a 1 hour chart, I've chucked an arrow here showing that we've got daily bias as bullish. We've got our internal range liquidity, which is our previous day high. I'll draw on liquidity here. So this will be potentially the first level that price will be drawn to. And if price breaks through this level, I'll be looking for price to be drawn to our daily buy side liquidity. And I wanted to explain a little bit on the power of 3 as well. If we're having a bullish bias, we would like to see price to consolidate a little bit before breaking down, grabbing sell stops, what you want to call it, liquidity raid or liquidity purge, before an energetic up move. So in ICT's Mentorship 2022, he explains this really well, because smart money will like to grab some sort of liquidity before rushing back upwards. So for bullish bias, this is the power of 3 move that you guys will want to be looking for. In this particular trade, this pattern was what I was looking for as well. Down to our 15-minute chart, we can see that price slowly has been moving upwards. Price moved upwards here. Make a quick rundown, potentially grabbing liquidity before running back upwards again. Now, the reason why I didn't take this trade is because when movements like this happen, when power of 3 movement happens, I would like to see big candles going down and quickly going up again. If you see here, huge candles going down, but the candles that are going up, they're pretty weak, small little candles here. So it's not really what I'm looking for. I want quick energetic move towards the upside, and that's when I find it the most convincing, and that's the setup that I'm looking for. Also, the patterns here didn't occur during the Asian session, the Killzone, which is from 8 to midnight, New York time. So if you're looking for annotations on the 15-minute chart, price will be potentially be looking to be attracted to these levels here, these 3 buy-side liquidity. We normally refer to this as low resistance liquidity run because there are liquidity pools sitting here, here, and here. A lot of liquidity up for grabs for price to move up to. Okay, just remember that. When it's a high resistance liquidity run, there won't be buy side liquidity or sell side liquidity sitting here like that. Down to our 5-minute time frame, I've used an indicator here to actually show you when the Asian Killzone is, 8 o'clock to midnight. And this is still our drawn liquidity. These are our buy side liquidity that have been transposed from the 15-minute time frame. I've kept the power of 3 pattern here just to show you guys this was a trade setup that I was particularly looking for. And on the 5-minute time frame as well, we can see that there was a 5-minute fair value gap that has appeared here, which price has nicely encroached into this fair value gap. And this was what caught my attention. I saw a couple of wicks here. I saw this candle going up here before moving back out again. So I was monitoring price on the 1-minute time frame as well, and I noticed this. So remember, this is our 5-minute fair value gap. I'll show you this pattern actually appeared on a 1 minute time frame. So you can see price travel all the way up here, up here, up here, and I'll be trading in this kill zone itself. Anything outside of it, I'm not interested, because this is when volatility is present. And in my trading plan, the Asian Killzone is what I'll trade. That's what I'll stick to, and that's what I've back tested. So we can see here, price quickly move upwards. I wasn't keen on this. I was actually keen to see a pattern here where there was a liquidity raid. As we can see, price moved up here, broke down for a couple minutes before rushing back up again, breaking market structure. We've got a liquidity raid, power of 3 move here, so we can see consolidation, poke down, grab sell stops before going up again. Also, we've got confluence that it encroached into the 5-minute fair value gap. We've also got price going into an OTE, which is between 61.8 and 70.5%. That's an optimal trade entry. That's when you want to be trading, because it's an area of value. So just remember, don't chase price when you're looking for buys. You want to trade at the pullback, okay? And that's my setup. I took my trade around here, which is the 61.8% mark, held it all the way till our first internal range liquidity, which is our previous day high. And I took my full position off here. It was a nice 1 to 2 risk to reward trade, and the trade duration was about 25 minutes. It was a good day. So I hope you guys found this video helpful. Like and subscribe if you guys like this kind of content. Drop a comment below if you have any questions. Thanks for watching. I'll catch you guys at the next one.